Now we will see one question, and this question is based on assets disposal account. Previous question which was discussed by me, where we have prepared machinery account, provision for depreciation account and depreciation account. Here and in the previous question, the profit or loss on sale of machinery is shown in the machinery ledger of machinery. But here profit or loss on sale of machinery will be shown in the separate ledger, and that account is assets disposal accounts. Rest of the working will be same as we have done it earlier. Okay, so here the problem is related to assets disposal account, how the assets disposal account will be operated by us. When in the question it has given that you prepare the assets account, provision for depreciation account and assets disposal account. So this is the another way of recording profit on sale of machine or loss on sale of machine, and for that a separate account will be prepared, and that account is called assets disposal account. So the question is, on 1st September 2016, Gopal Limited is a company, purchased a plant for rupees 10,20,000. On 1st July 2017, another plant was purchased for rupees 6 lakhs. The firm writes off depreciation at the rate of 10% per annum on original cost method, means straight line method. Original cost method means straight line method. Its accounts are closed every year on 31st March. It means financial year is start from April and closed at 31st March of the next financial year, next year. On 1st October 2019, a part of second plant purchased on 1st July 2017 for rupees 1,80,000 was sold for rupees 1,10,000. Which plant was sold? The second plant, which was purchased on 1st July 2017 was sold on 1st October 2019. Part of the second plant for rupees 1,80,000 was sold for rupees 1,10,000. On 1st December 2019, another plant was purchased for rupees 3 lakhs. Prepare plant account, provision for depreciation account and plant disposal account. When they say the plant disposal account, you prepare the plant disposal account, it means profit or loss on sale of plant is not going to reflect in the plant account, but this profit or loss is going to reflect in the plant disposal account. A separate ledger will be prepared for that. Okay, so once again I am going to read the question and accordingly I do the working. Once again I am going to read the question and do the working accordingly. So on 1st September 2016, Gopal Limited purchased a plant for rupees 10,20,000. So this is the format I have already drawn it. This is a working note. This is a working note. So date of purchase is 1st September 2016. 1st September 2016. Plant is purchased for rupees 10,20,000. Date of purchase is 1st September 2016 and the plant is, value of the plant is 10,20,000. Okay. On 1st July 2017, another plant was purchased for rupees 6 lakhs. And out of this 6 lakhs, part of the plant was sold on 1st October 2019 for rupees 1,80,000. So I am just divided 6 lakhs into two parts. 1,80,000 plant purchased on 1st July 2017 is total 6 lakhs. I have divided this 6 lakhs into two parts. The plant which is going to sell on 1st October 2019, just I do the separate, I did it, and rest plant I have written this side 4,20,000. 4,20,000 plus 1,80,000, it is 6 lakhs. But I have divided this 6 lakhs into two parts. Plant, one part is which is not going to sell and the plant which has sold. Plant, this part is not sold and this part is sold. So I have separate, and this 1,80,000 plant is sold on this date 1st October 2019. So on 1st July 2017 plant was purchased for rupees 6 lakhs. So I have divided the 6 lakhs, the one part of the plant which is not sold and another part of the plant which is sold, so that we can do the working note to know the profit or loss on sale of plant. Next is the form write-off depreciation at the rate of 10% per annum on original cost. Okay, 10% is the rate and method is original cost method. Accounts closed on 31st March, it is also good. On 1st October 2019, part of plant which was part of second plant purchased on 1st July 2017 was sold for rupees 1,80,000. Okay, so I have separated this one. On 1st December 2019, another plant was purchased for rupees 3 lakhs. Okay, 3 lakhs. Now we'll do the working. So start with here, less depreciation. First year depreciation for 2016-17. This is the financial year, first financial year 16-17. This plant which was purchased on 1st September 2016 comes under this financial year 16-17. So 10,20,000, this plant is purchased on 1st September. So 1st September to 31st March 2017. So September, October, November, December, 4 months, and thereafter January, February and March, 7 months. So we'll calculate the depreciation on this plant 10,20,000 at the rate of 10% for 7 months. From 1st September to 31st March 2017. 1st September 2016 to 31st March 2017. Okay. So September, October, November, December, January, February and March, 7 months. So depreciation, we are going to calculate the depreciation. Okay. $96,650. So 00 59,000 59,500. 59,500. So we'll write it 59,500. This is the depreciation. 59,500. Okay, 59,500. Now we'll deduct this amount. 0,050,6,9. 9,60,500. So this is the written down value on 1st April 2017. 1st April 2017. Written down value on 1st April 2017. So this calculation is clear. Now next financial year. Come to the next financial year. Less depreciation for 2017-18. This is the next financial year. In this financial year, depreciation will be calculated on the original cost at the rate of 10%. So this will be 102,000, 1,02,000. 10% of 10,20,000, because method of depreciation is original cost method. Original cost method. Okay, and here the depreciation will be calculated for, it is purchased on 1st July. So 1st July to 31st March 2018. It's a 9 month. It's the 9 month. So 1,02,000. Here we will calculate the depreciation for how many months? From 1st July 2017 to 31st March 2018. 9 months. So 4,20,000 into rate of depreciation is 10% into 9 upon 12 for 9 months. For 9 months we will calculate the depreciation. 3 upon 4. So it is 0,0513. 31,500. 31,500. Okay, depreciation for 9 months. Next is 1,80,000. Again we will calculate the depreciation for the same month. 1,80,000 into 10 by 100 into 9 upon 12. 9 upon 12, 9 months. So 3 upon 4. 45 into 3, 13,500. 13,500 depreciation for 9 months. This comes under this purchased on 1st December 2019. So this will be in the another financial year. So we will find out the written down value on 1st April 2018. Written down value on 1st April 2018. 8,58,000. Okay, here it is 0,058,883. 3,88,500. Okay, and here is 0,05661. 1,66,500. 1,66,500. 100. Is it clear? 1,66,500. Now we'll calculate the depreciation. This one is clear. Depreciation for 2017-18. Yes. And this is for 16-17. Now less depreciation for 2018-19. Financial year is 2018-19. This is the financial year. On original cost method, again 10% of original cost, 10,20,000 into 10%. So 1,02,000. 1,02,000 is the depreciation. And here 4,20,000 into 10%, so it is 42,000. 4,20,000 into 10%. 1,80,000 into 10%, so it is 18,000. 18,000 depreciation for the whole year, whole financial year, April to March, because this machine is used in this financial year up to 31st March, right from April to March for the 12 months. So the written down value on 1st April 2019. So the 005,657. So it is 7,56,500 and it is 3,46,500 and it is 1,48,500 after deduction. Written down value less depreciation. Is it clear? Less depreciation. Now depreciation for next financial year, depreciation for 2019-20. This is the fourth year, 2019-20. So here the depreciation amount will be same, 1,02,000 on the original cost, 10% on 10,20,000. Here also it is 42,000 on the original cost, 4,20,000 into 10 upon 100. This is also the same amount for the whole financial year. Come to this one. This machinery is sold, this 1,80,000 part of rupees 6 lakhs machine plant is sold on 1st October 2019, which comes under this financial year 19-20. So from April to October, 1st October. So calculate the date: April, May, June, July, August, September. 6 months. From in 1st October it is sold. So we will calculate the depreciation of 1,80,000 at the rate of 10% for 6 months only, from April to September, because on 1st October this machine was sold. So the depreciation is 9,000 is the depreciation amount for 6 months. So 9,000, this is the depreciation for 6 months. Okay, this machinery is purchased in this financial year on 1st December for rupees 3 lakhs. So 1st December 2019 to 31st March 2020. 1st December 2019 to 31st March 2020. So December, January, February and March, 4 months. So we will calculate the depreciation for 4 months. So 1/3. So it's 10,000. It's 10,000. Depreciation on 3 lakhs rupees at the rate of 10% for 4 months is 10,000. First of all, we will calculate the profit or loss on that machinery which is sold. Profit or loss on the machinery which is sold on this date, 1st October 2019. So the written down value of this machine on that date is 1,39,500. This is what this is, written down value on 1st October 2019. Okay, this is the written down value. This machine is sold, sold for rupees. At what amount this machinery is sold? See the question. At what amount this machine is sold? This machine is sold for rupees 1,10,000. 1,10,000. So this machinery is sold for rupees 1,10,000, which is less than the written down value as on 1st October 2019. The machinery written down value is this, but it is sold below than that. So there is a loss of rupees 29,500. This is the loss on sale of plant. This is the loss which is suffered, sale of plant. So this column I am going to close because no further calculation will be done in this column because the plant is sold. Now we will find out the written down value of the rest of the machinery. We will find out the written down value on 1st April 2020 on rest of the machinery which is in our hand. So it is 6,54,500. It is 0,05403, 3,04,500, and this is 2,90,000. 2,90,000. So written down value on 1st April 2020. Is it clear? 2020. 1st April 2020. So this working note is clear. Now thereafter we will prepare the plant account. So we will prepare the plant account on the basis of this working note. So on 1st September the plant is purchased. So September 1st, first of all we will write the year 2016. 2016 September 1st. To bank account. When we purchase the plant, entry is plant account debit to bank account. So to bank account we have purchased for rupees 10,20,000. In this financial year 16-17, no other machine was purchased. In this financial year, no other, only one machine was there. So at the end of the financial year 2017, March 31st, by balance carried down, same amount 10,20,000 will be carried down. Now we will close it. Close the ledger of the first financial year 16-17. Now this balance will be brought down in the next financial year 2017, April 1st. To bank account. to balance brought down. So this balance will be brought down on the first day of the next financial year. 10,20,000 will be brought down. Now we have entered into this financial year. In this financial year 2017-18, one more machine was purchased on 1st July 2017. July 1st, to bank account we have purchased another machine on this date. 6 lakhs, total is 6 lakh, 4 lakh 20 plus 1 lakh 80, 6 lakhs machine is purchased on this date. Now on 2018, at the end of the financial year, we will find out the balance carried down. So total of this side is 16,20,000. 16,20,000 is the total. We will write the same total this side, 16,20,000. Thereafter, the balance we will find out. There is no figure in the credit side, so this amount will be the balance amount itself. So balance is 16,20,000. This balance will be brought down in the next financial year, first day of the next financial year, April 1st, to balance brought down. This is 16,20,000. 16,20,000. Now we have entered into this financial year 2018-19. In 2018-19, no other machine was purchased. Okay, so in 2019 March 31st, same will be the balancing figure by balance carried down. Same will be the balancing figure. 16,20,000 will be the balancing figure. Same amount, because there is no other purchase, or no machine is purchased and no machine is sold in this financial year. So the opening balance and closing balance will be same. Now this will be brought down in the next financial year 2019, April 1st. April 1st, okay, April 1st, 2019, April 1st. So on April 1st, to balance brought down 16,20,000. This balance is brought down on 1st April 2019. We have entered into this financial year 2019-20. You see, in the 2019-20, one machine is sold. This one is sold on 1st October 2019, which comes under this financial year. As well as on 1st December 2019, one machine was purchased. December 1st, December 1, to bank account, one machine was purchased. The machine of rupees 3 lakhs. Machine of rupees 3 lakhs. Okay, is purchased. Now, and in this financial year 2019-20, on 1st October 2019, October 1st 2019, one machine was sold whose value was this. Written down value as on this date was this. They sold for 1,10,000 and loss is this. So what we'll do, when it is requested to prepare the plant disposal account, then this entire amount, this value will be transferred to plant disposal account. What we'll do here, we will write by plant disposal account. Separate ledger will be prepared to find out the profit or loss on the sale of plant. So the original cost of the plant 1,80,000 will be, the full amount will be transferred to plant disposal account 1,80,000. This amount will be transferred to plant disposal account. Okay, and thereafter we will find out the balance at the end of the financial year on 31st March 2020 by balance carried down. So we will find out the difference amount. We will find out the difference amount. So for that we have to do the total. This side total is 0,000,291, 19,20,000. Same total you write it over here, 19,20,000, and the difference amount is 0,000,471. 17,40,000 is the difference amount. 17,40,000 is the difference amount. This balance will be brought down in the next financial year on April 1st, 2020, April 1st, to balance brought down. This 17,20,000 will be brought down. Okay, 17,20,000 will be brought down on which date? April 1st. On April 1st. Is it clear? So when it is requested to prepare the plant disposal account, so we are not going to calculate the profit or loss on sale of plant over here. The original cost of the plant which was sold, the original cost will be transferred to which account? Plant disposal account. It means the entry for that will be plant disposal account debit to plant account. Plant disposal account debit, the entry will be plant disposal account debit, disposal account debit to plant account. So this entry will be plant disposal account debit to plant account. Is it clear? Journal entry for this is plant disposal account debit to plant account. This will be transferred to which account? Plant disposal account. The original cost will be, the whole amount will be the machinery which, the plant which was sold, the whole amount, the original cost amount will be transferred to plant disposal account, and separate ledger will be operated to find out the profit or loss on sale of plant. Okay. Now the next ledger is provision for depreciation account. Provision for depreciation account. So this side, you know the entry for provision for depreciation, depreciation account debit to provision for depreciation. So first accounting year closed on, this is the first accounting year 2016-17. So on the date of 2017 March 31st, by depreciation account, because entry is depreciation account debit to provision for depreciation. So that is 59,500. Only one depreciation of one machine. So this will be carried down. This amount will be carried down. So 2017 March 31st. March 31st to balance carried down 59,500. 59,500 will be carried down. Now next financial year is 2017 April 1st. This will be brought down by balance brought down. This figure will be brought down 59,500. Okay. Now come to this financial year 17-18 financial year. So in this financial year 17-18 depreciation is this. So you do the addition, depreciation, you do the addition. Okay, this is 1,02,000 depreciation of first machine. Depreciation of second machine is 31,500. Depreciation of third machine is 13,500. So total depreciation is 1,47,000. 1,47,000. So 2018 March 31st by depreciation account 1,47,500. Sorry, 1,47,000 only. So do the total once again. This side also in this financial year 005,602. So this side total is 2,06,500. Same total I am going to write over here, and the difference amount will be the balance March 31st. To balance carried down, that is 2,06,500 is the balance carried down. So this financial year is completed. Okay, now this balance will be brought down in the next financial year first date April 1st 2018, April 1st by balance brought down. It is 2,06,500. Now coming to the next total, this one 18-19. We have entered into the financial year 18-19. So first depreciation is 1,02,000. This one, second is 42,000, and third one is 18,000 is the depreciation. 18,000 on third machine. So 0,00261, 1,62,000. 1,62,000. So financial year end on 31st March 2019. So by depreciation account, by depreciation account 1,62,000. 1,62,000. Now we'll do the total this side 0,058,63, 3,68,500. Do the same total this side as well, 3,68,500. So 2019 March 31st to balance carried down 3,68,500. 3,68,500 balance carried down. This balance will be brought down in the next financial year April 1st. April 1st by balance brought down. By balance brought down 3,68,500. 3,68,500. Okay, this is related to plant disposal. Okay, plant disposal account. Disposal account. This entry was plant disposal. Disposal account. Okay, this entry I have taken from the first ledger plant account. Okay, so this one. Now, so this balance is brought down on 1st April 2019. Okay, now come to the financial year 2019-20. 19-20. So in this financial year, one machine is sold on 1st October 1st by depreciation account 9,000. This one and for the rest of the machine on 2020 March 31st by depreciation which is in our hand. So this is what, 1,02,000. Next is 42,000 is the depreciation. Third, we have written over here 9,000 depreciation on October 1st. Fourth one is 10,000. 10,000. So total depreciation is 1,54,000. 1,54,000. The machine which is in our hand, 1,54,000. And the machine which was sold, this is very important, in 2019 October 1st, the machine which was sold will be transferred to plant disposal account. Plant disposal account. The machine which was sold, this machine is sold, so depreciation of this machine is total depreciation first year 13,500 is the depreciation, second year 18,000, third financial year 9,000. So total depreciation on this machine is 13,500 plus 18,000 plus 9,000. So total depreciation is 40,500 is the total depreciation. So this total depreciation of machine sold will be transferred by us to plant disposal account. Plant disposal account. So what will be the entry of this? The entry will be, you know the entry, plant provision for depreciation account debit, provision for depreciation account debit to plant disposal account, plant disposal account. So how much amount is? 40,000, this one 40,500, 40,500. Okay, 40,500. Now we will find out the difference. Thereafter we'll do the total 0, 0, 5, 17 and 4, 21, 2, 5, 5,21,500. Same amount I am going to write this side, 5,21,500. So difference will be 0, 0, 0, 1, 8, 4, 4,81,000. 4,81,000. The total is correct. 5, 17 and 4, 21, 2, 6, 5, 3, sorry, 3. 5,31,000. So it is 5,91,000 is the difference amount. 5,91,000. So on 2020 March 31st, to balance carried down. This will be carried down. In the next financial year, 2020, April 1st, April 1, by balance brought down. That is 4,91,000. 4,91,000. This balance will be brought down on the first day of the next month. Is it clear? So this one will be, for that we will prepare the plant disposal account separately. Now next ledger is plant disposal account. Is it clear? Plant disposal account. How this figure has come? It is total depreciation of machine sold, 13,500 plus 18,000 plus 9,000. The total is 40,500 will be transferred to plant disposal account. Okay. Now come to the next ledger which will be prepared by us, plant disposal account. Here the separate information regarding the plant which was sold will be given over here. So we have done this entry in the first ledger, in plant ledger. This entry was done by us, plant disposal account debit to plant account. On which date? This entry is done on the date of sale. Sale date is what? 1st October 2019. So on 2019 October 1st. October 1st. So plant disposal account debit to plant account. Here to plant account, right? Amount is 1,80,000, the original cost of the plant. This entry we have done it while preparing the ledger of plant. In the credit side we have written on the credit side of plant account, by plant disposal account on October 1st 2019. Now that entry will be posted in the debit side of plant disposal account. Next is this provision for depreciation on the same day 2019 October 1st by provision for depreciation account. This is how much? 40,500. Provision for depreciation account debit to plant disposal account. So in the plant disposal account, this will be posted in the credit side. By bank account, the plant is sold for rupees 1,10,000. 1,10,000, and there is a loss of 29,500. So this will be transfer. So statement of profit and loss. This is what? Loss on sale of plant. Loss on sale of plant. How much it is? It is 29,500. This one is the loss. 29,500 is the loss on sale of plant. Now you do the total of both the side. Both the side will be, total will be same. So 0, 0, 0, 0, 8, 1, 1,80,000 and 1,80,000. The total will be same. Okay, and this plant disposal account will be prepared for that year, that financial year in which the plant is sold only. So plant is sold not in this financial year, not in this financial year, this financial year. Plant is sold in this financial year 1920. So this financial year ledger will be prepared. Okay, so we have discussed the three ledger: plant account, provision for depreciation account and plant disposal account. Okay.